Hello Rocky Outcropticians, and welcome back for another Bitcoin technical analysis video with me, your pal Rocky Outcrop. And in today's video I'm just back from the dentist, which is nice because clean bill of health there, which is great, and I'm ready to re-stain my teeth with tea. But before we dive into the charts, I just thought that the word SWOT in the UK means somebody who studies an awful lot, practices an awful lot, and you might be asking yourself, why do we look at the charts every day and always sort of exercise that? And well, somebody sent me a link to a video by a chap called Sunny Decree on YouTube earlier, and I think that in part of it explains that perfectly for us. Just look at how let's just watch this together, shall we? How the Chinese SWOT practice, and they really do. I mean, the swatting action of this person that runs in at the end of this bit is just fantastic. So this guy is a suspect with coronavirus. This is all practice, by the way. Boom! Wow. Has some skills. Now, you don't get those skills without practicing every day. And to be fair to Sunny Decree, I've not watched all of his video at all, so I hope that I'm not like taking the piss here too much. But so I'm hoping that everybody that ever gets the coronavirus makes a speedy and full recovery. Let's dive on into the charts and see what's been going on. Okay, so here we are in the charts, and this is the Bitcoin versus US dollar 24-hour Bitfinex chart. Bitfinex? Why am I on Bitfinex? Well, it's clean and empty. Well, we can just look at this here anyway. It's a good starting point. Why not? We should always, every so often, just check out the charts without anything on them to see what we can see. So we can see here that this big channel here looks like it could almost be getting broken out of. I wonder if that would fit inside the channel or not. It looks like it might just about do that. But also what we had recently with prices been trending up the ways, and you can see it's been above the 21 for some days, and then has since January, the start of January, and we have then also come down here and tested below the 21 and come back up and got above it and then come down, and we're being supported on it right now. So that's kind of what's happened overall. But then let's also look and see that you can see that the prices came up above their previous tops here and made higher highs, which is good. Came in again and made a higher low so far, so that's good as well. There's been a big amount of volatility here, and that's, I suppose, something that's somewhat explicable. So we'll take a look at the CMEs in a second to get a bit of an explanation on what that could have happened there. And you can see then, I suppose, that right now where the price is, pardon me, in and around this 9,750 or so level is definitely an area to be keeping an eye out for in terms of support and resistance historically. So we had this big old descending triangle you can see here back in June over to September, and the prices that are around the bottom of that are around about where the price is currently. So anyway, okay, that's enough of a broad view for now. You can also see that there's been a golden cross on the 50 simple versus the 200 simple here that crossed just a few days ago or a week or so ago. Great. Oh, a new subscriber. Now Rock On subscribed. Thanks so much. Thanks so much to everybody who subscribed, by the way, and to the newest one, Now Rock On. And yes, I appreciate it so much. It actually means so much to me. I never really realized before how much that sort of stuff would mean, and it means an awful lot. So I really do appreciate it. And incidentally, every time a new subscriber comes along, I think back all the way back to the first subscriber that I've had, and every single one of you, it's not just the latest subscriber that's the most important one to me, and it's not the first subscriber that's the most important one to me. It's like all of you, and every time one person does it, it's great. Anyhow, right, so let's get back to the chart analysis real quick. Let's just go over to, you can see here that we've not had a bearish engulfing candle. This is a bullish engulfing candle here versus this tiny little red one here, but we haven't had a bearish engulfing candle, and the prices did come down and look like they could have been bearishly engulfing for the day's candle prices here, but we can see that it's moved back up above the 21, so that, I suppose, wraps that up. And go over to the CMEs and see, well, where are we going to have a gap? Well, we got a gap. It's kind of too difficult to be bothered looking at there on that chart. Let's have a look at the 4-hour chart or something so we can see what this gap would have looked like. easier. So the ended prices had a wick here up at 9775 or so, and then they opened up again here around, oh sorry, no, here at around 9930, and the prices did then go up a wee bit, seemed to be rejected from this 50 simple moving average, although that's a bit rich to say that, and then has come all the way back down again, and went all the way back down, filled the gap and then some, and actually went all the way down as far as 9595 there on those charts. And if we look over here to the spot prices, that actually was represented maybe even in just more or less the same sort of a way here. So you can see that the prices came down as far as 9,587, and that was where we were really keeping an eye out for in terms of like, are we going to be getting in another higher low? So we're on the 4 hour currently looking at this, and you can see that since the prices did this sort of head and shoulders thing here, we've actually not had any sort of measured move off the back of this, and instead we're just going up, which is good because that there didn't really look like one overall to me anyway, although I did say in advance when the prices were up here that it could look like one, so we'd be aware of that, and we've been aware of that. We still are as well. The prices break down below the neckline here, then sure, maybe something could happen, but I'd probably be tempted to call it a different name then at that point, the pattern. And so anyway, we've seen that we've had since this low here, actually since this low here to this low here, we had bullish divergence between these 2 points here, so that was classic bullish divergence, not hidden or anything. And then we go into the charts here, and we're seeing that since this then has been trending up the way ever since, where we had this is our low, this is a high, this is low, this is a high, this is a low here that we're currently at putting in right now. And the volatility then has been real over the last wee while. And looking over here at the sort of very small time frame in terms of this being a trend. Of course, it's not at the minute, but there isn't any sort of standout divergence in the way that there was this bullish divergence here. So we're doing okay overall. I suppose is how we could sum that up. And we're just consolidating sideways really in this period here of where you could potentially draw in some sort of triangle, symmetrical triangle here. And if you were to get a sort of move from that at 10,400 down to the 9,086 there, then that's a $1,500 move. So if you were to then break out and use that, if that was one, which it isn't, if it was though, then you'd be looking all the way down here to these targets down around the 8,000s and up at the 11,500. So, you know, those things could happen though, and we could look retrospectively say, oh, this looks like a symmetrical triangle now that must have had a breakout here. But I'm not so keen on that idea myself overall. But you can obviously try and draw something in here and say, well, look, what about this up to here? So that could happen, I suppose, in the long term. But really, what we're looking for over the period of the next few days is whether we can. It's the same story as yesterday. Thanks for tuning in. Thanks so much for liking and subscribing. And I guess I'll just wrap up here. It's the same story really as yesterday. What we really need to do is make the price get up here above this 9,850 level instead of beating around here at 9,750, just to continue the more or less upward incline that we've begun here. Otherwise, we are just going to be consolidating in around this range, and you'd be looking at getting a continuation of what we've seen so far here in terms of higher lows, and potentially then if we were to come up here and not get any higher highs, then you could consolidate here for a while. But really overall, we're actually looking for us to break up past the first level here at 9,850 and then establish ourselves above 10,000 and then up to 10,200 or so areas, 10,150, and all of those are profit taking zones. Okay, so when the prices went up yesterday, I hope that you were aware of that, and that because I did say that here as well that this is a profit taking zone around the 10,000. Of course, the next one's the 10,155. So that's not, if you were taking profits there, that's not a bad thing. You didn't do the wrong thing at all. And at the time, you might have been thinking to yourself, oh, this volatility. But of course, there was the CME gap to be aware of, which then laterally got filled. And of course, that the prices extended up as high as the 10,000 area, because whenever they opened up on the CMEs, they just went up. They just went up at the start when they opened up this wick here, all the way up to there, to that simple moving average. Okay, so we'll tune in again tomorrow. We'll keep that practice going, and we'll get our SWOT action like bang on. Like, subscribe, thanks very much, and I'll see you in the next one.